Hello, welcome to another episode of Decentralounge, brought to you by GlobalStake, your institutional, truly decentralized, self-owned and managed SOC 2 Type 2 compliant bare metal staking service provider. We're excited to have Justin Garland and Hannah Hamilton, the co-founders of Asymmetry Finance, with us. Asymmetry Finance is redefining the landscape of decentralized finance by providing structured products for liquid staking, restaking, inflation-resistant stablecoins, and so much more. Their platform focuses on enhancing the utility and liquidity of staked assets, offering innovative solutions to crypto investors seeking optimized returns. Today, we'll discuss the inspiration behind Asymmetry Finance, delve into its pioneering financial products, and explore Justin and Hannah's vision for the future of crypto investments. Justin, Hannah, welcome to the show. Why don't we just start off with sort of everybody's favorite piece, the backstory. How did you come to Web3? What got you interested in blockchain and DeFi? And we'll just go from there.
Hannah, take us away.
Awesome. Yeah, thank you for having us. First of all, happy to be here. So Justin and we entered the space quite a long time ago. I joined the space in 2014. So I was studying mathematics, but became obsessed with kind of the cryptography side of Bitcoin, Ethereum, and else. And then started playing around with those. I became an actuary, though, in traditional finance. So for those that don't know, actuaries measure risk. There is so much risk to measure in crypto, and we've kind of brought that approach into a lot of our own products at Asymmetry. But I was an actuary for a few years. I regrettably maximized profits for a health insurance company, eventually lost, well, I never had passion for that, so eventually I left. And I jumped into crypto full time. So my first crypto job was at a crypto nonprofit called Giveth, and they were helping both fundraising and remittance payments go across borders for free. Western Union just kind of throws a ton of unnecessary fees in there, and we were trying to fix that. And then eventually I had my own idea with Justin here. Oh, actually, I give Justin total idea credit, but he came to me for some of the mathematical modeling, said, does this idea have legs? We saw it did, and then Asymmetry was born. And now we've been building that for 2.5 years. So it was a bit of a windy path. I also had some time at Genesis Global Trading. I saved $1 billion of their institutional DeFi dollars from the UST collapse. So that's a longer story, and it kind of feeds into what we're building now. But that's a bit about my background. And Justin, I'll let you intro.
Sweet. No, I appreciate it. It's been a ride. I found Bitcoin in 2011. Was playing around with FIFA Ultimate Team. I was talking with a friend about needing to maybe write that story up on Twitter one day, and kind of telling how we were responsible for Ultimate Team's price ranges and some other stuff. I was always, I suppose, destined to play with the tokens and the coins, but found it in 2011. Went and got software engineering and finance degrees, then did corporate software engineering for a little bit, stayed involved, kept an eye on things, and then went to go build a cybersecurity startup, left that, and then I went to go work for Shapeshift for the first time, like as a real full-time crypto job with Eric Voorhees and the whole kind of OG Shapeshift crew, and took them from a centralized company into a DAO, which was super cool, and obviously learned a lot through that process, and then served as head of product at Silo Finance, and then it was time for Asym to be born. And at the time, over 2 years ago now, I don't think we had any idea that it would kind of find a way to where it is today, but couldn't be happier. Everything happens for a reason. And it's gotten to meet some incredible people like yourselves through this process. And I think that's kind of honestly probably the most fun piece of it.
Well, you talked about this original idea that you brought to Hannah and needed the mathematical modeling. And there's been a ton of evolution with what Asymmetry has actually, like, from where it started to what you guys have actually like producing or currently producing now. So what was the genesis idea and what you were trying to accomplish? And Henry kind of alluded to UST being part of this too in this story. So what was that original idea and how has it progressed to the current suite of offerings that you guys offer now?
Yeah. So basically the original idea was, we knew Ethereum staking was taking off. If you can believe, that's how early this was. Ethereum staking had not yet taken off. And basically we said, Ethereum staking is going to take off. What can we build there? And Justin's idea was, he's also super bullish, kind of the convex ecosystem. And he said, what if we build a higher yielding staking product for Ethereum. So we know that there's sustainable yield in convex, and we know that we can find a great ETH LST to pair it with. And happy to say that today that product, we just ran the numbers and it was at a 41% APY for those that bought and held. So highest yielding staking product. But I do want to just point out one thing that we do at Asymmetry, and we have since day one, is we said anyone can make numbers on a screen, say 40% APY, 1000% APY, whatever they want. But most protocols do that by just minting a governance token that is going to last for 2 weeks, right? Or like maybe a month. And they're artificially boosting yield. They're destroying their own token economy. It's not long-term. Many people feel fooled at the end of it. We said, let's actually find sustainable yield. So none of the yield comes from our own governance token. All of it was generated from more sustainable yield sources like convex, which essentially derives, yield at the end of the day from curve usage, trading fees in that ecosystem. So that was our product that we really set out to build first. And then we also said stablecoins are going to be huge. Synthetic dollars are going to be huge. Let's do something similar with a synthetic dollar, not necessarily by way of convex, but we looked all across DeFi and said, where can we find high yield for a synthetic dollar that is sustainable? And speaking about UST, is not at risk of a complete, death spiral, like minimizing that chance and essentially offering users scalable, sustainable yield that they can feel good about. And that's what we've built, which we'll be launching in just probably a little over a month here. Haven't announced our date yet, but that gives you a little bit of loose time frame. But that's what we've built over the last few months.
Yeah, just picking up there too from Hannah's piece, a big core, I think, tenet of Asymmetry and what we set out to build was along the lines of kind of having pillars that we really think the products all fall into, right? So decentralization being a massive one, permissionlessness being a huge piece of it, trustlessness, right? Kind of going hand in hand with that. But then we really talk a lot about this, and I know some of our community will laugh because they've heard me say it about 1,000,000 times, but like, if it's not easy enough that my mom can use it, and she's great, like she does awesome with this stuff, just learning all the time, but like, if it's not easy enough that she can use it, it's not easy enough for this next 100 million users that we all talk about. Hey, we want to expand this ecosystem. We want new users coming in. We want, new flows coming in, whether that's from retail or institutional, but like, you have to get over this hump of, wow, it is so incredibly difficult to onboard, so incredibly difficult to stake. How do I even do this? Like, what is happening in the background, and UIs are terrible and stuff like that. So we really spend a ton of time on like the go-to-market side of things. And just from a user experience perspective, when we build something new, it gets run past our parents. And maybe they don't understand exactly everything that's going on in the background, but if they can understand the end result, which frankly is what most people care about at the end of the day, then it's simple enough and they understand how to get in and get out, then we're in the right place. And I think the rest of that will follow. So we spend a ton of time kind of along those lines. And really, to Hannah's point, everything that Asymmetry has built is designed to last for, forever, really, right? It'll live on chain, but there's no centralized counterparty risk of, hey, we need to come in and step in and do this one thing, or it relies on the team to do X or Y. And that's a huge piece of it, of you have to build products that are able to adapt to all changing market conditions permissionlessly. And so that's a big piece of the synthetic dollar stablecoin that we have coming out, as Hannah said, pretty shortly here, of users are able to set their own interest rates on their borrowing. And so for the first time ever, users don't have, like, for example, DAI Maker. The committee sets the interest rate that people borrow and lend at. And USDAF doesn't have that. It's thanks to Liquidity V2 and an exclusive license there, the users will be able to set their own interest rates. And so whether the market is hot or cold, or rates are high or low, whatever happens with T-bills doesn't matter. People can adjust permissionlessly. It isn't up to us. It isn't up to anyone else. It's just purely up to the market. We're big believers in kind of that free market approach.
And letting users choose their own risk. That's the actuary in me.
Can we double click into that a little bit more, just to kind of learn a little bit how, like, maybe go a little bit deeper into how users can actually set their own interest. And I love how you had the warning and that it's up to each individual, right? And this is certainly a space when we think about Web3 that preaches individual responsibility and having to, not your keys, not your coins and everything else. But would love to learn a little bit more about how that actually works.
Totally. So within the Liquid EV2 system, so Liquid EV1 was kind of the largest, I think, widely adopted ETH borrowing CDP stablecoin platform other than Maker's DAI. But DAI has a lot of USDC behind it. So I would say LAUSD, Liquid EV1 was the largest decentralized and truly decentralized permissionless ETH borrowing platform where you could mint a stablecoin against your ETH as collateral. And so Liquid EV2 builds on that because in V1, there was a problem with over collateralization when real rates, T-bills, whatever you want to use there in the real world, started to rise, then people had to continue to over collateralize their positions in V1 in order to not get redeemed against and basically have all of their collateral go down. So it became pretty inefficient over time as people were forced to like 300, 400, 500% over collateralization in order to not get redeemed against because they were borrowing at 0% and you can redeem against them. So kind of glossing over that a little bit, in Liquid EV2, you're able to set your own interest rates. So quite literally, it's all programmatic on chain. You say, hey, I want to borrow at 1%. Go for it. You can do it. Or, hey, I want to borrow at 10%. Go for it. You can do that too. And you can change them at any time. But the lower your interest rate is, that means you are first up to get redeemed against. So if the stablecoin depegs, people will say it's at 99 cents. People will go buy it for 99 cents and they can go redeem it in the protocol for $1 worth of collateral. The lowest interest rate gets redeemed against first. And so there's a little bit of a give and take, right? Push pull here of you can push the limit on how much you're willing to pay and go as low as you want, but you know that you're first up to get redeemed against if the stablecoin depegs. And so in that way, it incentivizes users to kind of all probably congregate around each other, and you can see where the distribution will be. It's not a secret. We want users to see exactly, are they first? Are they last? Like what does this distribution look like, right? So everyone has the information, but it'll kind of create a really interesting, again, kind of open market free dynamic of you can go wherever you feel comfortable. And then if real rates rise, then it's likely that rates rise in the system too. But if real rates fall, then it's likely that people are more comfortable going down too. And so you get this ability to adapt to any market condition, which is unique because there's no centralized party that needs to step in and say, hey, all right, we're going to raise it, we're going to lower it, we're going to raise it, we're going to lower it. It's permissionless. And so from a market adaptation standpoint, there's no limitation on how fast it can move. It's as fast as the users are, as fast as the market is, which tends to get priced in almost immediately.
That sounds really interesting. And it seems like you guys are, the focus of Asymmetry, broadly speaking, is really decentralization and permissionlessness too, because when it comes to, like you already talked about her earlier, like when you were saying how it's not going to impact the ASF token itself because the yield's not coming from that. And immediately I was brought back to DeFi summer of 2020 and all those crazy farms where they would just like mint a coin out of thin air and you'd have these crazy APYs, and you were lucky if the thing wasn't a rug to begin with, right? Because it was like half of these DeFi farms. And it seems like the evolution of the space has continued a lot since, over the last like 4 years. But one of the things that you guys have done with the ASF token is this really is about building a DAO, and it really is about building something that's truly decentralized, and that the owners of the tokens will have a lot of say in what the future governance of the Asymmetry Finance sort of platform will look like over time. So is there a reason why you wanted to kind of structure the ASF token in this way? And what do you foresee for, the token holders moving forward as the DAO continues to evolve?
Yeah, that's a really great question. And some background here. So Justin and I haven't shared how we met, but we actually met at an ETH Denver event a few years ago. And we started chatting, and it was right after DeFi summer. And we found out that we had been rugged in all of the exact same protocols. And so we bonded so hard, and it was actually the first time that getting rugged was a positive in my life, because it was so fun to talk about with someone who chose these same rugging protocols. And we talked about that, and then we continued, sending DeFi information and back and forth, and eventually realized, oh, we both kind of, that person knows their stuff, she knows her stuff, and we ended up working together. But essentially, when designing the protocol and making initial plans for the token, we pretty much said, like, how can we make this as rug proof as possible? Like, you never know what's going to happen. Crypto is volatile. None of this is financial advice, but it seems the more decentralized it is and the stronger your community is, and also the earlier you allow your community to actually access that governance token, participate in governance, vote on things, and control the protocol, that's like the playbook you have to follow. So we did a few things differently. The first thing was we had a very large public sale right before our TGE. So there was a 10% amount of ASF that would be unlocked immediately, available to the public. That gives so many more tokens than most protocols give out to community from day one. And it allows the community a whole lot of governing power from day one as well. So we wanted to do that and really start decentralizing. I think now we're sitting at we're close to, I think, like, we're between 1,000 and 2,000 total token holders, which are tokens only a few weeks old. That's incredible. And we're seeing a lot of those actually being vote locked for governance voting. But beyond that, we also flipped the script on the classic playbook of launch at the highest FDV possible. We said, what if we actually launch at a low FDV? Because that allows the early community members to get in from the ground floor and actually govern the protocol as it grows, as we launch new products, make key decisions about those products and get it into the hands of the community as early as possible. It leads to a much healthier token economy that has spoken for itself. And basically, our community is really strong. Even after kind of crazy days of a ton of volume or great, announcement reception or things like that, we see that everyone's like pretty diamond hands in our community, and they're all engaged. Everyone's engaging on Discord, and that's great to see. So basically, decentralization is super important. It also is a necessity to actually protecting key products that could be huge in society, like an inflation-resistant stablecoin that's high yielding, which is what we're creating. Like, you want thousands of people governing that. You don't want that in the hands of a few people. So we're doing everything we can to get there as fast as possible.
As far as like user adoption goes, I am kind of curious. Not all of these family offices, hedge funds, or just modern institutions that are starting to enter the space feel comfortable using like a Web3 wallet and interacting with DeFi directly. Oftentimes they feel a little bit safer with the custodian kind of hugging them from behind. Are you all looking to partner with any custodians, or have you partnered with any custodians, or how are you looking to help the institutions enter the space and interact with DeFi differently from a degen?
Yeah, so one of our early investors and backers is actually F Prime, which is the token fund that's affiliated with Fidelity Investments. So I'm sure everyone here knows Fidelity's name. They are huge in the institutional world. So they've been backing us since our private VC rounds, and we're in close contact with them. If you watch their press releases too, there might be something about us coming out pretty soon. So a little bit of alpha there for you. But with that connection, it has really unlocked the amount of institutional players we're able to contact and interact with. We're going to go down that road, and also make, as Justin said, everything as easy as possible. So, if we're working with, say, institutional adoption or different centralized exchanges in the future, we want this to be custom to everyone's kind of risk parameters and things like that. So so basically those conversations are ongoing. Our X account would have the first announcements. Can't leak anything here, but a little bit of alpha there for you. So yeah.
Yeah, and Jordan, to your point there too, I think that gaining access to the institutional side is super important for adoption overall, right? You've seen that as these BTC ETFs, as the ETH ETFs, maybe there's more in the pipeline, I'm sure at some point, the flows that come as these large scale institutions say, all right, 1%, 2%, 5%, whatever the number is, allocation into digital assets happens, as kind of the adoption curve goes, that'll continue to push further into kind of the risk spectrum and further down into like the DeFi world. But it's up to us as well to kind of meet in the middle. So as they come down to us, we need to kind of swim upstream to them as well. And so F Prime will be a huge piece of kind of that connection into the institutional world as we make our way there. And really, I think for us from a narrative and messaging standpoint, it's about really forming a solid base within the digital asset world, kind of where we're playing right now. And then to that point, you can start to make the case to large scale institutions. Hey, here's how you get in. Here's how you onboard. Look, X amount of dollars are already in before you. There's plenty to feel comfortable with. There's plenty of liquidity. Here's, smart contracts have been battle tested, audited X times, et cetera, et cetera. And that's really where I think you start to make those gains from an institutional perspective, because they're not going to be the first movers, and they know that, as do we all. And so it's, okay, let's build up a really, really strong base, and then you can make the case and you get taken seriously in those conversations.
No, that's fantastic to hear. I think a big problem that I've noticed in the crypto space, just personally over the last several years, has been those that have catered strictly to degens and that are wondering why institutions are not using what's been built for a degen. And to your point, swimming upstream and being able to say, hey, let me hold your hand, let me show you something that feels comfortable, that you're used to, but brings you into the future of finance, we'll get a lot more adoption. So fantastic what you guys are building. I'm really excited for it.
Well, thinking about the future, and you guys have already accomplished so much and you've built so many incredible products. I mean, where do you see where is this all going for Asymmetry Finance? I mean, obviously there's a huge community component because of the decentralization and the aspect of the ASF governance token. But just as founders, what do you envision for the future? If you were to imagine, say, 5 years out toward the end of the decade, what does Asymmetry Finance look like? What do you hope for?
Yeah, so many people have dubbed us the Ethena competitor on-chain Ethena. I think most people in crypto are also well familiar with that name. Ethena scaled to 7 billion in the first few months after they launched, and they're a high yield stable coin. So there is such clear demand for high yield stables, and a reason for that actually goes back to one of the core reasons both Justin and I are in crypto, which is we believe that there are certain fundamental human rights that crypto is able to offer people worldwide, like custodying your own assets, like access to a banking system, even if it's not a traditional banking system. But also one we believe in is people should have access to inflation resistant stable coins. You should be able to hold your life savings somewhere and not see that eroded every single year by inflation, especially if you're holding your assets in US dollars, but you don't reside in the US and you don't get any benefit from our inflationary spending. But you do see, your purchasing power erode over time. So we think that everyone should have access to that. The issue with something like Ethena, it is a great product. We love what they built. They did an amazing thing, and clearly so many people are using it. But one of the problems is it's not entirely on chain. The yield is actually generated off chain. So there is a lot of trust there. It's a centralized group that are making those decisions for some of that yield, at least for their traditional product. And that basically is not something that I would necessarily use. I like my assets to stay on chain. I like to see where the yield's coming from, self-validate, and things like that. So basically we said, let's find something that has the yield similar to Ethena, but is entirely on chain and accessible to everyone except sanctions countries, other countries for some reasons. You can check on our site, but essentially offer that globally. So we set out and we built USDAF. It's 15 to 40% APY. Some of that is market dependent and some is based on the user set interest rates. But it's for sure, that's well beyond the average year's inflation. So we built that, and looking into the future, we'd like to see that used by as many people as possible. We always want to see that be as permissionless as possible and just accessible. And we'd love to see it actually help people's lives and help them just retain purchasing power in an asset that they don't have to constantly manage, and where yield is never really taken off chain, but they can always see where their assets are.
Really well said.
Awesome. Well, I just want to say for those that are listening that are interested now and they're saying, hey, I want to start interacting with the various different products that you guys offer. They want to know when USDAF is officially launching. Where can they see the news? Where can they play? Where can they reach out and speak to somebody? Like, what's the best place to get plugged in?
Yeah, official site asymmetry.finance or our official X account at Asymmetry FIN. That's ASYMMETRY for both of those.
Awesome. Fantastic. And we'll have all those linked below in the descriptions. But Hannah, Justin, thank you both so much for coming on today. We really appreciate it. And thank you guys for those that are listening. Please definitely go reach out, start interacting with Asymmetry Finance's products. And we're excited to see how the future of the company continues to grow. But thank you guys, and we'll see you next time on Decentral Lounge.
Thank you so much.
Thanks, guys.